Soybean meal, and corn prices rallied over resistance last week due to dryness in South America and concern that increased demand for U.S. soybeans, soybean meal, and corn exports could lower U.S. carryout, which means prices may need to go higher to ration demand. We also may need to rally prices to make sure farmers in the U.S. increase acres next year higher than last year and higher than some of the early private guesstimates. In January, USDA gives us two reports. In early January, we'll get a new supply and demand report. In December, they made a few changes. Some people think they should raise U.S. soybean demand and corn demand and lower the carryouts, which could raise prices. At the end of the month, we get a December 1 stocks in all positions report. Sometimes that shows some interesting numbers, and the market's looking for lower bean and lower corn and wheat stocks, lower soybean and lower wheat stocks than last year, and higher corn stocks. On Monday, we had a very volatile trade in the grains. We were higher overnight because of dryness in South America, and worry is that this could tighten U.S. stocks, and the fact that last week we traded over resistance gave us some kind of positive technical signals. But then we broke hard on news of a new virus strain spreading in UK, and that UK had 100% lockdown, and there are travel restrictions in and out of UK until more is known about this new virus. Scientists, though, have said that they do not think this new virus is going to stop the success of the vaccine. But still, we'll be watching headlines to see if that impacts the positive note that we've seen the last few days, that the vaccine could finally put us past the virus, get the economy to bottom out, and the economy to start moving higher. So we expect that during this holiday time frame, with low trade volume, that we would expect volatile reactions to any news on the new virus, the vaccine, and the old virus. Anything as far as the stimulus package that was approved by Congress, any weather in South America, and any new demand for U.S. corn and soybeans.
Stock index futures are under pressure today, as it appears that there is a new strain of virus in the UK. So that negative overpowering the bullish influence of what appears to be a new economic stimulus package here in the U.S. Longer term, though, it's the interest rate environment that is likely to support the stock index futures longer term. Last week, the dollar index traded at its lowest level since May of 2018 and did take out the psychological 90 level. However, today we are seeing some flight to quality buying coming in. However, I think this is a trend that will probably not last for very long. It still appears that the main trend is lower for the dollar index. So the rule of thumb on flight to quality moves is that quite often they only last for a day or a few days. I think that will be the case this time. So all of the longer term trends that have been in place, I think, will resume in a couple of days. And that is higher stock index futures, a lower dollar, a higher euro, and lower prices for the 30-year Treasury bond futures.